Northstar SCI managed fund had a solid absolute performance year, delivering 18.4%. The standard deviation of the fund has always been relatively low compared to competitors at 8.8%, sector average at about 10.5%, with some peers at 14%. So clearly in a year of high risk taking in markets, the fund has a slightly more subdued return compared to the peer group. That said, in the last 6 months of the year, we funded 10% in line with the peer group. Big outperformance came in the form of the fixed income component of the portfolio, whereas for once the offshore stocks slightly disappointed compared to years of outperformance and alpha generation, and the domestic side more or less in line with the market there. In terms of big developments in the fund, from an optimized perspective, we reduced offshore equity as market levels are high and valuations are stretched, and that position in the fund was redirected towards SA fixed income with yields at around 10% in quarter 4. The offshore side of the fund, equities reduced from over 20% down to about 16.8%. On the domestic equity side, optimization indicates that we should be at about 50% based on prospective returns from our buy list, and that's exactly where the fund is positioned. In terms of overall sector weighting domestically, we've been underweight resources, which is difficult considering it's the 4th year of outperformance of the resource sector against other major indices on the JSE, but stock picking in the fund has been solid. Overall, we remain overweight industrials in the fund, with a healthy position in financials, which really worked well in December, and underweight resources. We don't see that changing, with caution as the world slows down. We think the stocks that we own should outperform the market, and we think the fund's well positioned to continue to outperform its inflation target benchmarks.